Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi Dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. Today's update focuses on a statement that, at first glance, may sound optimistic yet measured. The message suggests that while the peripheral looks rough, the core direction of Iraq's monetary path appears positive. It references expectations surrounding a real effective exchange rate, the possibility of a digital dinar, and the broader goal of global integration. In this analysis, we will carefully break down what those themes mean, how they relate to Iraq's current economic structure, and what realistic implications they may have for Iraqi dinar followers in both the short and long term. When someone says that the peripheral looks rough, it typically refers to external pressures and surrounding challenges rather than the central monetary framework itself. Iraq's economy does not operate in isolation. It is influenced by regional geopolitical dynamics, fluctuations in global oil prices, fiscal policy execution, domestic political coordination, and global financial conditions. For example, instability in oil markets directly affects Iraq's revenue base, since crude exports remain the backbone of national income. External geopolitical tensions can create volatility in trade flows and investor sentiment. These factors can make the overall picture appear uncertain from the outside. However, the core monetary framework is primarily managed by the Central Bank of Iraq, which is responsible for exchange rate policy, foreign currency reserves, inflation control, and maintaining financial stability. Over the past several years, the central bank has emphasized structured reforms, modernization of the banking sector, and compliance with international financial standards. So when analysts suggest that everything's going great, at the core, they are often referring to institutional reforms, digital payment infrastructure improvements, regulatory tightening, and monetary stabilization measures. Now let's address the concept of a real effective exchange rate, often abbreviated as RER. This is a technical economic measure that adjusts a country's currency value against a basket of trading partners' currencies while factoring in inflation differentials. It is not simply the official exchange rate you see quoted in currency markets. Instead, it reflects competitiveness. A real effective exchange rate that is aligned with economic fundamentals suggests that a country's currency is neither severely overvalued nor undervalued relative to its productivity and trade conditions. For Iraqi dinar followers, this is a crucial distinction. Discussions around exchange rates can sometimes lead to speculation about dramatic shifts or sudden changes. However, a move toward a more realistic effective rate is typically gradual and based on macroeconomic data such as inflation, foreign reserves, trade balances, and fiscal discipline. Iraq's exchange rate has experienced adjustments in recent years, including devaluation phases intended to manage fiscal stress and support government revenue in local currency terms. Those adjustments were policy responses rather than speculative events. The key question is whether Iraq is moving toward a more stable and internationally credible exchange rate regime. If the central bank continues strengthening foreign reserve coverage, improving transparency in currency auctions, and reducing parallel market distortions, then confidence in the dinar's stability could gradually increase. Stability, not sudden appreciation, is often the primary objective of central banks in emerging markets. A predictable and transparent exchange rate system supports investment, trade contracts, and long-term planning. Another major element mentioned in the statement is the digital dinar. This is an area that deserves careful analysis. A digital dinar could take multiple forms. It may refer to expanded digital payment systems, electronic settlement mechanisms within Iraqi banks, or potentially a central bank digital currency, sometimes called a CBDC. Many central banks worldwide are studying or piloting digital currencies as a complement to physical cash. These initiatives are typically focused on efficiency, transparency, and reducing the informal cash-based economy. In Iraq's case, a shift toward digital financial infrastructure would align with modernization goals. Expanding digital payment systems can help reduce corruption, improve tax collection, enhance compliance with anti-money laundering standards, and increase financial inclusion. A digital framework also makes cross-border transactions more transparent and compatible with global banking standards. However, implementing a digital dinar would require robust cybersecurity systems, public trust, legislative backing, and cooperation with international financial institutions. From a short-term perspective, any development toward digital currency integration is more likely to influence the structure of transactions rather than immediately impact the nominal exchange rate. The introduction of digital tools does not automatically change a currency's external value. Instead, it can gradually strengthen the overall financial ecosystem, which in turn supports long-term confidence. Now let's focus on the phrase, on track and promising for global integration. This is a significant concept. Global integration involves connecting Iraq's banking system with international correspondent banks, complying with global financial reporting standards, and aligning monetary operations with institutions such as the International Monetary Fund and the World Bank. Integration also means improving transparency to attract foreign direct investment. For Iraqi Dinar observers, global integration is important because currencies gain credibility when their issuing country is deeply embedded in global financial systems. Compliance with international regulations reduces the risk premium associated with investing in that country. If Iraq continues implementing reforms in banking supervision, anti-corruption measures, and fiscal accountability, it could gradually improve its standing in international credit assessments. In the short term, however, investors should understand that structural reforms take time. Financial markets respond to consistent policy execution rather than isolated announcements. Exchange rate stability depends on sustained fiscal discipline, diversified economic growth beyond oil, and controlled inflation. Iraq still faces structural challenges, including dependence on oil revenue, public sector wage burdens, and infrastructure gaps. These realities mean that while the trajectory may be promising, progress will likely be incremental rather than sudden. It is also important to evaluate the broader global context. The US dollar remains the dominant reserve currency, and global interest rate cycles influence emerging market currencies worldwide. When global financial conditions tighten, emerging markets often experience capital outflows and currency pressure. Therefore, Iraq's exchange rate path must be understood within global macroeconomic cycles, not just domestic reforms. In the medium term, if Iraq strengthens non-oil sectors such as agriculture, manufacturing, and logistics, it could improve its trade balance stability. Diversification reduces vulnerability to oil price shocks, which historically have caused fiscal strain. A diversified economy also supports a healthier real effective exchange rate by enhancing productivity and export competitiveness. From a long-term perspective, the most meaningful factor for Iraqi dinar stability is institutional credibility. Transparent governance, consistent monetary policy, independent central banking, and legal protections for investors create an environment where the currency reflects real economic fundamentals. If digital transformation and global integration initiatives are successfully implemented, they could contribute to long-term financial resilience. However, responsible analysis requires balance. While progress may be visible in financial modernization and regulatory compliance, external geopolitical risks remain. Regional tensions, shifts in global energy demand, and domestic political developments can all influence economic momentum. Currency stability depends on how effectively institutions respond to such pressures. For dinar followers, the key takeaway is that optimism should be grounded in measurable indicators. Watch foreign reserve levels, inflation trends, fiscal deficit data, and updates from the central bank regarding payment system reforms. These indicators provide more reliable guidance than broad statements of confidence. In the near term, we can expect continued efforts towards stabilizing the exchange rate within a managed framework. Policymakers are likely to prioritize liquidity management and narrowing the gap between official and parallel market rates. Any movement toward digital currency infrastructure will likely begin with pilot programs and gradual implementation. In the longer term, if Iraq maintains reform momentum, strengthens governance, and expands economic diversification, the dinar could benefit from enhanced credibility and reduced volatility. That does not imply guaranteed appreciation, but it does suggest the potential for increased stability and integration into global markets. As always, responsible investors should approach currency-related information with caution and patience. Exchange rate developments are influenced by complex macroeconomic forces, not single announcements. Structural reforms require time, political coordination, and institutional consistency. The current message that things appear on track and promising should therefore be interpreted as a reflection of reform momentum rather than a signal of immediate currency shifts. A real effective exchange rate alignment, digital financial modernization, and global integration are strategic objectives. Achieving them involves sustained policy discipline and economic resilience. For those closely following Iraqi dinar developments, staying informed through credible data sources and official statements is essential. Avoid emotional reactions to isolated comments and focus instead on long-term structural indicators. Thank you for watching Iraqi Dinar News. If you value responsible, balanced, and factual updates about the Iraqi dinar and Iraq's economy, make sure to subscribe to the channel and like the video. Remember, this content is provided for informational purposes only and does not constitute financial advice. Always conduct your own research and consult with a qualified financial professional before making any investment decisions.